Dear viewers, welcome to my channel. In this video, a problem will be solved on conversion of single entry into double entry. Kindly watch the video till the end, share among your friends, like it and subscribe to the channel. If you already subscribed, kindly ignore this. If you have any comments, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on preparation of final accounts under single entry. So this is a question which has appeared for the year 2014 of financial accounting of Chennai University. So the problem runs like this. Miss Ankita, let me stretch this. Miss Ankita Patil keeps her books under single entry system. Prepare her trading account and profit and loss account for the year ending 31/3/2014 and also balance sheet as on that date from the following. So the next here we have given the cash book here. So cash book, which is nothing but summary of receipts and payment account. Let me insert a table here. So particulars rupees. So to balance brought down, which is given as rupees 1000 by creditors rupees 20,000 to sales rupees 4,000 by salary then to debtors 30,000 then by rent 800. Next, by general expenses which are given as rupees 2,000, then by wages rupees 4,000, then by domestic expenses 5,000. Domestic expenses are nothing but drawings here. Then by cash purchases 1,500. Then by balance carried down 500. So the total of this is 35,000. So 35,000. Then the next one here, additional information. So assets and liabilities on beginning 1/4/13, then 31/3/14. So cash in hand given as rupees 1,500. Then stock 6,000, then 9,000. Then debtors 7,500, then 10,000, then furniture 3,000, closing also 3,000. Then we have got machinery 15,000, then creditors 2,000, 2,500. She also informs that provision for bad debts at 5% and depreciation on fixed assets at 10% per annum should be provided. So this is a simple problem here. So first let us understand this problem here. So when it is gone through this problem here, we have not provided the opening capital, so we need to prepare the opening we need to find out the opening capital by preparing the opening statement of affairs. Then we are not at all provided with the credit sales, so for that reason we need to prepare total debtors and total creditors account here. So now let us go for preparing the statement of affairs of Miss Ankita Patil. So Miss Ankita Patil's statement of affairs as on 1/4/2013. So let me insert the table here. So here it is, liabilities rupees, next assets rupees here. So here at the opening here we have given creditors. So creditors rupees 2,000, then asset side cash in hand given as rupees 1,000. Then there are no other liabilities here. Then stock 6,000, then debtors 7,500, then furniture 3,000, then machinery 15,000. So the total here, so total of this here, that comes to 32,500. Let me write down the same thing here, 32,500. Then the difference here is capital. So here capital, the capital difference it comes to 30,500, which is a balancing figure in this problem. So let me make this as a bold here, 30,500. So now let me go for the next one. Here we need to prepare the total debtors account. So debit total debtors account. So here let me insert a table here. Let me insert table. So particulars rupees, particulars rupees. So now we start the opening balance here. So to balance brought down, that is rupees 7,500. Then when you look into the receipts and payment account, here the amount received from debtors is 30,000. So when the cash is received, to cash account debit to total debtors account. So debtors account is credited by cash. So 30,000 is received. Then there are no other transactions here. So by balance carried down, that is rupees 10,000. So total, so the credit side is more here, so 40,000. So the difference, let me write down here also, 40,000. Here it is to sales in the bracket credit balancing figure. So here that comes to 32,500. So this is the amount of the credit sales made during the year by the trader here. So the next one here, total creditors account. So let me insert a table here. So particulars rupees, particulars rupees. So it will start the opening credit balance. So by balance brought down. So the opening balance, that is of the creditors, is given as rupees 2,000. Then when the payment is made to creditors, so total creditors going to cash count. So how much is paid? 20,000. Let me write down this here. So let me write here, to cash 20,000. Then to balance carry down, because there are no other transactions here, so the closing balance of the creditors is given as 2,500. So by purchases, in the bracket let's write here credit balancing figure. So first let's take the total here, total. So total here it comes to 22,500. So here also 22,500. So the difference here it will be 20,500. So this is what we have found here. This is nothing but we have got the credit purchases here. So let me make it bold here. Then the next one comes here. We need to prepare the trading and P&L account. So trading and profit and loss account. Profit and loss account for the year ending 31/3/2014. Let me insert the table here. So particulars, rupees, particulars, rupees. So it will start the opening stock. So to opening stock. So opening stock is rupees 6,000. Then buy sales. So we have got both here. So cash sales are rupees 4,000. Then credit, which we have found as 32,500. So the sum of this will be 36,500. Next, to purchases. Cash purchases are given as rupees 1,500. Then credit rupees 20,500. So the sum of this will be 22,000. Then closing stock. By closing stock. So the closing stock is given as rupees 9,000. So now we need to ascertain which are other trading expenses. So from when you look into the cash book here, we have given wages. So to wages. So wages are rupees 4,000. So let us leave a line here. So here it is total. I think credit side is more here, so that comes to 45,500. So let me write down here also 45,500. So the difference is to gross profit carried down. So when you deduct here, you will get 13,500 as the gross profit. So which should be brought down here. So by gross profit brought down, that comes to 13,500. Then the administrative expenses. So to salary 1,200. Then to rent, which is given as rupees 800 here. So 800. Then next one, to general expenses. Rupees 2,000. Then to RBD, reserve for bad debts, which is given as 5% of rupees closing value of debtors, that is 10,000, which comes to 500. Then we have got depreciation on fixed assets. So fixed assets are here in this problem. We have got both furniture and machinery. So now to depreciation on machinery. So the rate of depreciation here is 10%. So 10% of rupees 15,000, which comes to 1,000 500. Then on furniture, again same rate, 10% off, rupees 3000, which comes to 300. So the sum of this will be 1800. 1800. So there are no other things here, so just let us leave a line here. So the credit side is more, total that comes to 13,500. Let us write down the total here. So total 13,500. So the difference is to net profit carried down, transfer to balance sheet. So that is rupees, when you deduct here you will get 7,200. So let me make it bold here. So 7,000 profit we have got here. The next one comes here, preparation of, so balance sheet as on 31/3/2014. So let me insert a table here. Liabilities rupees, assets rupees. So let us have capital here. So the capital which we have found here, it is 30,500. To this we should add net profit. So net profit we have arrived here at to be 7,200. So the subtotal will be, subtotal that comes to 37,700. Less drawings. So drawings are rupees 5,000, which are given the problem. So 5,000. So the difference will be now 32,700. Then next here, cash, closing cash balance, it is given as 500. Then next one here, creditors rupees 2,500. Then here it is debtors rupees 10,000, less RDD, less RBD or RDD, that comes to rupees 500. So the difference here it will be, so it will be now, the difference here it will be 9,500. 9,500. Then next, furniture. So the value of furniture is given as 3,000. 3,000 less depreciation, that is 10%, 300. So 2,700. Then machinery here it is 15,000 less depreciation 1,500, so 13,500. Then stock 9,000. So now let's take the total here. It is 35,200. So total 35,200. So this is what is the answer here. Let me make bold here. So let me center this here. So this is the answer for this question.